Okay, we got a few people collected here. I just want to make an announcement that if you are not a non-registered rep, this may not be the webinar for you. So uh, we have a similar presentation on the 29th for registered reps only, but this is for non-registered reps, just to clarify. So this is webinar 1 of 5 that we'll be doing over the next month or so. And today we're going to talk about Athene's best accumulation product that helped them become the #1 distributor of FIAs for the second straight year in a row. Performance Elite is a bonus product with optional enhanced liquidity and ROP. And today we're also going to learn some game-changing, efficient frontier research on Athene index selections. And we have got Alex Hill, who's done many presentations for us in the past very successfully. And we appreciate his support and Athene's support. I think we work together really well as partners. And, today I'm looking forward again to this presentation. As always, Alex will share some of his information with you so you can get in contact with him for questions, but you can always reach out to us or any of the VPs here on the DMI side as well. So again, Alex, thank you so much for being here, and I am just going to hand it off to you. And again, appreciate your time today.
Excellent. Thank you, Glenn, for the intro, and thank you everyone for having me. As Glenn said, my name is Alex Hill, the business development wholesaler here at Athene, partnered with DMI. And I'm really happy to be here with you guys and go over our Performance Elite, the FIA of the year last year. So like I said, thanks for having me. Here's what we're going to be covering today. The Athene company story, or why it's great to work with Athene, what we can bring to the table, our efficient frontier research, how to diversify between the indices, and then the accumulation product training, going over our Performance Elite. So the Athene company story. So Athene was created by Jim Belardi, our current CEO. We started with an idea and $1 billion investment from Apollo Global in 2009. We began our retail business in 2011. And in 2021, we became the #1 distributor of FIA products in all channels. So in just 10 short years, we have been able to climb the ranks and prove that we are a really, truly great company out there to do business with. But, you don't have to take my word for it. We can kind of get to some numbers here. So Athene has $215 billion in total GAAP assets, and we are A-rated across the board with an A+ rating by the S&P. Now, we anticipate the other 2 ratings from AM Best and Fitch to go up this year as well with our merger of Apollo earlier this year. So Apollo, the company that initially invested us that $1 billion to begin, we have grown so well, done so much with them and for them that they want, us to become really spearheaded and move forward. And that's what we've been able to do. So at a glance, Athene has 59,000 appointed financial professionals. We are #1 ranked provider in fixed index annuities for 2020 and 2021. We have 100+ years in our 100+ years of experience with our acquired companies. We've been serving consumers, 1,300 employees, #1 player in the US PRT market, and #4 largest portfolio of fixed deferred annuity assets in the United States. But like I said, don't just take my word for it. So we did win 3 separate awards last year from the SRP Awards. We won Carrier of the Year, FIA of the Year, and the Performance Elite, which is what we're going to be discussing today, where we did $2 billion in sales. And then Carrier Hedging Team of the Year, which is really all about index pricing and how we were able to hedge our finances and the options of the indices. And that's the other thing we're going to discuss today is our indices and how to diversify and the power of them and why our indices are so great. So we have creative products and solutions for all different sectors. We have products for income, accumulation, legacy, and protection. But what are our competitive advantages? So the first thing is our better asset management. So on average, Athene is able to earn 40 basis points more on our returns than our competitors, and we're able to do that with less risk. So think about this. If you're able to do more with less, that is a better overall proposition for you, for us, and for the client. We're able to do less with more, or I'm sorry, more with less, excuse me. Doing less with more is not as good. We're able to do more with less and really take full advantage of our capital here. So the second thing is we have lower operating costs. Like I said, we only have 1,300 employees with 220 in GAAP assets. That is a stark contrast. We're able to do so much with such a lean and mean team. Additionally to that, we have no legacy business weighing us down, things that were written in the past that are, poor performing or really dragging down anything. So we don't have any excess costs of that nature as well. And additionally, we are also only focused on annuities. So we don't do life, we don't do health. So that means all of our time, all of our money is all focused on one thing. So we can bring the best to the table. And then our third is capital. So like I said earlier, we recently partnered with Apollo. And by doing that, that gives us the excess capital that we truly need to go out and capture the business that we're looking for, capture anything that we need, and really take full advantage of this marketplace and really poise ourselves and our clients to be in the right position. So overall, Athene's going to provide our consumers with a better value proposition. Athene's driven to do more. So we're never satisfied with today's win. It's what makes us a leader in the fixed index annuity space. Our vision is to be, at the top of the market where we are now for the long term. We have no intentions of slowing down at all. We're driven to do more for our distribution partners and their professionals. So that would be DMI and you guys. We're really driven to make sure that, you guys can be successful in what you do as well. And we also want to be able to provide innovative solutions and powerful index crediting strategies. So like I said, today we're going to be discussing one product. We do also offer a multitude of other offers. So we have the Athene AccuMax 7, which is great for accumulation. The Athene Agility, it's going to be an agile product that offers income and an enhanced death benefit. The Ascent Pro Bonus, one of the best income solutions on the market. The Athene Max Rate, which is a strong fixed annuity. And then the Performance Elite, which we're going to be talking about today, which is the #1 in accumulation in the market. So without anything else, let's get started on the Athene Performance Elite. So the Performance Elite comes in a 7, 10, and 15-year chassis, and it has a premium bonus at issue, market-leading crediting rates, and then strong optional liquidity features that are available for your clients who feel they may need extra liquidity and may be concerned about being able to get their money out and, spend it to live their lives. So additionally, we do also offer index crediting strategies with an optional strategy charge. Now, this is going to be a fee of 1.75%, but by using that fee, what we're able to do is we're able to effectively double the client's participation rate and really be able to let them take full advantage of the marketplace and really get the best bang for their buck. So here's a quick breakdown of the bonuses that we offer on the 7, 10, and 15. So the base model of the 10 and 15 is going to offer a strong bonus, but the one thing I really want to focus in on here is that bonus for the Performance Elite 15 plus, 17% in most states. Now, what's the advantage of a bonus on a product like this? Well, we're able to use that bonus to offset any cost to get out of any other bad contracts that aren't performing the way that they should be, aren't really doing the clients any service, and we're able to get them into a better contract with that bonus off the top, get things kick-started, and then get them into something good that is going to perform for them and give them, the value that they deserve and they desire. So with the Performance Elite, we actually have 19 different crediting options. Now, it's a little bit easier than it sounds when I say there's 19 crediting options. What that really means is that we have 5 different indices available, all available with charge and no charge options, and then most of them being available in a 1 or 2 year point-to-point. So we have 5 indices, 4 different ways. So we have a lot of different options out here for your clients, and they can really get the best of both worlds, really decide what's going to fit their needs best. So like I was saying, if we look at these participation rates on these indices, we're looking at 120% on the 2-year BNP with no fee, and then we're going to kick that all the way up to 220 with that strategy charge. This is where the client can really get that accelerated growth that true performance that they're looking for, which is what makes us an elite product. And then here are going to be the rates as well for the 10. The 7 and the 10 will have the same rates available to them. But then if we look at that 15-year product, this is where we really step up in the rates, and we're able to offer higher participation for the client and really assist them with that growth. So like I was saying, we have 5 indices plus a fixed option, 1 and 2 year index terms, and then charge and no charge strategies. The great thing about those charge and no charge strategies is you can tailor those for your client's needs. So what that means is the client doesn't have to go all in on all fee-based strategies. They can tailor it to fit their comfort level or to max any assets under management or anything like that. That way everyone is comfortable and everyone is familiar with what they're getting into. So if they would do 50-50, it's going to be an annual charge of 88%, 25-75, 131, so on and so forth. So the client is really able to be flexible and versatile if they're not comfortable with one thing or the other. Now, there is a great value in using that strategy charge option. So this is going to be a look back over the last 10-year period here and how the indexes would have performed using the with charge and without charge option. Now you can see at the end of that 10-year period, the client's going to be able to walk away with an additional $13,000 roughly, which is a huge asset to them, meaning that fee is paid off and it is really paid for that growth, the additional growth that the client has received. So additionally, there's no fear. So just like with all fixed index annuities, even using the strategy charge, if the client were to have poor performance over the duration of the contract, we will true them up and make them whole. So for this example, the client starts with an initial premium of $100,000. They have strategy charges of $15,000, but only interest credits of $13,000. So at the end of that 10-year period, their accumulated value is $98,000. And the client's thinking, well, hold on, that's not stellar. I started with 100. Well, great news. We're going to true them up with that strategy charge credit of $2,000, bringing them back whole to that initial $100,000 that they had to start. So if we take a look back at the performance on some of these, here's the 7-year. So the 2-year BNP, that worst we saw was 3.31%, but on average we saw 6.5%. And same thing with the NASDAQ and the AI-powered U.S. equity index, 5.75% on average, 6% on average. We're really looking at some strong performance, and this is just the average performance. Now, if we look at this again with those strategy fees, we're going to shoot this performance up to almost 8% on the BNP, just shy of 7 on the NASDAQ, and just over 7 on the AI-powered U.S. equity index. And it's going to be the same story for the 10 and the 15, where the client is, again, getting strong performance here, 7, 5.5, 6, and then we're really ramping it up over the length of that time period. Now, one thing I've had people question me on in the past is if the 7 and the 10 have the same participation rates, why is the average performance different on this? And that is simply because it's being averaged out over 10 years versus 7 years. So there's more time for it to grow and accumulate over that time frame. So additionally, the Performance Elite also has some great liquidity features available to them as well. So the base model of the Performance Elite 7 is going to have 10% free withdrawals built in the first contract year. And the 10 and the 15 will also have 5% free withdrawals built in from year 2 on. So after that first contract anniversary, the client can pull out up to 5% on the 10 and the 15. Now, this is a RMD-friendly product, meaning RMDs can be taken in that first contract year regardless. So the client is all good there. Now, we do also offer a Performance Elite Plus model. What that Plus is going to offer is some really exciting enhanced liquidity features. So it's going to give clients with the 10 and the 15, 10% free withdrawals from the initial go. And then if there's no withdrawal made in any given year, that client's going to have a 20%, what we call a rollover free withdrawal. So effectively that 10% goes to a 20% free withdrawal if no withdrawal is made in any given year prior. The other great liquidity feature that is built into the Performance Elite Plus is a return of premium or ROP feature. What that means is after a certain amount of years, if the client wishes to take their initial premium and invest it elsewhere, they have the opportunity to do so. So 10% free withdrawals available immediately, 20% rollover draws, and then that 100% return of premium feature where the client's cash surrender value after the 4th contract year will never be less than the premium minus the premium taxes and prior withdrawals. So it's a great value for those clients who are concerned about, oh, what about my money? What if I need to access it? We are giving them the opportunity to access more of their money than most of them will ever need to. So this is a great benefit for those clients who are really concerned, and you can ease their woes. Now, the Plus Rider does come with an annual fee of 95 basis points, which will be deducted from the annuity's accumulated value during the withdrawal charge period, and this rider cannot be terminated. But let's look at how that rollover flexibility, the rollover withdrawal, works. So let's say in year one, the client does not take a withdrawal. In year two, that leaves them the ability to take up to 20% in year two. Now, since the withdrawal was made in year two, they can only take up to 10% the following year. And again, with another withdrawal, the maximum they can take is only 10%. So this does not continue to be 20% year over year. This does not grow to 30, 40, 50%. It caps off at 20%, but it's some still very powerful, very strong liquidity features for those clients who really like the peace of mind of knowing that they can go and grab those funds if they need to in a pinch. So we do also offer, like I said, that return of premium. And then here's the contract features that we're going to look at. So if we look at the base model compared to the plus model, there's no fee on that plus model. It is a fully free, no fee associated, except for the optional fees of the plus for the liquidity and that bonus, as well as the additional optional riders for the enhanced performance or the enhanced participation rates. Again, same thing here for the 10 and the 15, 5% free withdrawals beginning in year two, or 10% with that plus model, and then the 20% enhanced liquidity if there's no withdrawal made in any given year. So why Performance Elite? Performance Elite is going to offer great premium bonuses to assist your clients in poorly performing contracts get into something new and exciting. It's going to offer marketing leading crediting rates. There's a reason that this was the #1 FIA of the year last year. There's a reason we did $2 billion in sales in this last year. And it is because this is a strong product, really geared for performance and accumulation for your clients. In addition, we have powerful liquidity features that your clients can use and really take full advantage of their funds. Well, now that we know about our great product, how do we use our index selections to have the product perform the way we want it to? So we all know that, with a fixed index annuity, the floor is 0. But when it comes time that the client gets to 0, they're not very thrilled with that. I'm going to show you how diversification can assist you and your client in avoiding that tough conversation. And I'm going to do that right now. So what is efficient frontier theory? Efficient frontier theory is all about maximizing return per unit of risk, or effectively how to get the most out of your client's money with risking it the least amount possible. This way we can increase returns and decrease risk. We've actually produced a white paper on this. We are the only company out there to have done so. And I can get that out to you guys at the end of this presentation here if you so choose. But let's take a look at our national index lineup. So you'll see at the top there, we have the S&P 500, which is the bellwether index. Everybody knows it. Everybody's familiar with it. It's what's on CNN every day. Oh, the S&P did this, the S&P did that. Now, we also offer an S&P 500 with the daily risk control. What that's going to do is it's going to allow us to put a participation rate on that index and really give the client a higher opportunity to get more and more gains. Now, we also have 3 boutique indices that we offer. We have the AI-powered U.S. Equity Index, which is an advanced equity exposure index. Now, this is going to be powered by IBM's Watson. So this is powered by AI technology, meaning it can look forward and look backward to best predict the market and really make sure your client's in a good position. We have the BNP MAD 5, which is going to be a multi-asset index made up of stocks, bonds, and commodities from the United States, Japan, and Europe. And then we offer the NASDAQ FC index, which is a Bank of America index. This is a structured U.S. equity index. So what this is going to follow the NASDAQ FC, follow the NASDAQ 100, but it's going to have that FC or fast convergence technology built in. What that means is this is going to be able to rebalance intradaily. So on the hour, it will be able to rebalance itself to make sure we're ramped in the right place for upward momentum and positioned to a position of cash for any downward momentum, meaning that we'll have much more stable returns with that. So if we take a look at the Callan chart here, the #1 thing beyond just the performance of the index that I believe it tells us, I believe this tells us that in any given year, we won't know which index is the best. So you can see in 2009, the BNP was at the bottom of the barrel. It was the worst performing index. And then 2010, it was second. And then 11 and 12 is the highest performing index. So in any given year, we never know what index will do what, which is why we feel diversification is so important. And we think it's so important, in fact, that we actually had our actuaries go out and create 44,000 different allocation plot points. And we had it all laid out on this graph here. And what you can see is we got kind of a perfect bell curve of risk and return. And then these dark blue dots right here at the top, that's going to be our efficient frontier. This is where we want our clients to be. This is where they can get the highest expected return for the least standard deviation of risk. So effectively, for whatever return they get, there's a less likely chance that it'll deviate one way or the other. Now, you can see that none of our indices actually fall on the efficient frontier on their own. The 2-year apex was close, but it was a little bit too risky to be considered part of that efficient frontier. So this is why we went out and we created these 3 different allocation sets for you to make your life and your client's life easier. We have a conservative allocation for clients that are a little bit more conservative, a moderate allocation, and then the aggressive allocation. Now, the aggressive allocation, I'm a big fan of. I think it's going to offer your clients the highest possible return and statistically the lowest likelihood of having a 0% credit year. And let's get into that right here. So if we look at this right here, you'll see that on these 1-year point-to-points, we'll see an average return of just under 3% to just under 5%. And then on top of that, more importantly, if we look at the risk of 0% interest credit, the column for that second from the right, you'll see that that's going to range from just shy of 12% to just over 32% of a 0% credit year in any given year. Now, if we look at the 2 years, you'll see that we have an average return. I'm sorry, not an average return. Our returns go from 4.5% to just over 6%. And an interest risk credit of 0% being almost 25%. But let's look at these diversified allocations. So for the 1 years, this conservative allocation, 3.77, that's right in that same sweet spot that these 1-year indices are on their own, with only a 7% risk of 0% credit year. Now, if we look at the moderate and aggressive, let's just skip straight to the aggressive. So we're going to have a 0% risk of interest credit statistically based off our research, while we're going to have an average annual return of 5.66%. That means we're still right in that same range of these other indices and better than some of them as well, while also offering the client a least likely chance of having a 0% credit year. That is a great value that you can bring to your client and say, hey, we can help avoid any poor performing years and make sure you're getting the best value out of this product. Now, we're such big believers in this diversification concept that we actually went out and we put this in all of our illustrations, and we put it in all of our illustrations before you even get to the illustration itself, meaning your client can see firsthand for themselves straight away, oh, this is why you would want to diversify. This is going to lower my chance of having a bad year while also raising my chance of having a good year. So we do also have some collateral on these diversification pieces, and I'd love for you to get them out to you if you desire. But in summary, I really hope that you have a better understanding of the Athene company story, the Performance Elite, offering growth plus liquidity with that strong bonus, and then our groundbreaking efficient frontier research, which is really showing you how to diversify, making that conversation easy for you and making you a very credible source for your client on which index to use and why. So thank you all. Thank you guys for listening. I hope to see you April 5th for our next one here. I'm going to pass this off to Glenn. Glenn, do you have anything else for us here?
Well, I would just say, and I didn't say this at the forefront. So if you have any questions, just use the Q&A function at the bottom of your screen. Just wondering if anybody does have any thoughts or questions they'd like.
Yeah, absolutely. If there's any questions, I'd be more than happy to answer them right now. I'll give everyone a minute here to type it into that Q&A function, and we'll go from there.
But I really appreciate the presentation, Alex.
Yeah, most certainly, Glenn. We're here to be your guys' partners, you and your advisors.
Well, we don't always talk about products on our DMI University webinars, but I think all of these products we're going to talk about over the next month or so are really valuable. and it's good to get into the details a little bit.
Agreed.
I don't see any questions at this time. You know what? Let me share something. I'm just going to share, if I'm going to stop sharing your screen, if that's okay.
Yeah,
Alex.
absolutely. Run the show.
Can you see that?
Yep, we sure can.
Okay. Yeah. So if anybody has questions about the products, our VPs are all well versed in Athene products and other products available out there. And feel free to reach out to them at 1-800-322-6342 or go to our dmiuniversity.com and you can get a lot of information that's more like topically oriented. We are going to open up a sub page called product education or something along those lines. And we will put today's webinar, the recording of the webinar, and some other materials up there on that page. So be looking for that. We will send those emails out.